Vishal is a little worried. His marriage is in November and the reason behind his problem is not marriage but taxes. Vishal has learned from friends that tax has to be paid on receiving gifts. He's worried that if he receives expensive gifts from family, relatives and friends at the wedding, he will have to pay tax on them. Now the trend of gifting in marriage has changed a bit. Now earlier people mostly used to give cash or jewelry as gifts. But now the trend of giving shares, FD and property is increasing. In such a situation, Vishal's worries are natural. What are the tax rules on wedding gifts? Let us find out in this video. During marriage, both movable and immovable property is given as a gift. Now shares, fixed deposits that is FD, mutual funds and jewelry are movable, whereas land, house, flat etc. come under immovable property. If you look at the Income Tax Act 1961, tax has to be paid if any gift worth more than 50,000 rupees is received in a financial year. However, there is no tax on gifts of any value and type if it is received from people falling within the definition of a relative. Now what exactly here is the definition of relative? Well, the definition of relative includes spouse, sibling, parent, spouse's parent. This means that apart from marriage, even normally, if he or she receives shares, FD, mutual fund or any property as a gift from such people, they will not be taxable. Now let's talk about friends or acquaintances because many gifts are received from them at weddings as well. Now as per the income tax law, marriage is the only occasion when no matter how expensive a gift a person receives, movable or immovable property, he will not have to pay any tax. If you receive gifts on occasions other than marriages such as anniversary, birthday or festivals, you will have to pay tax. In such a situation, tax will not be levied only under two conditions. What are those? Well, first, if the amount of gifts received in a financial year is less than 50,000 rupees. The second is if the gift is being received from a close relative. Now, it is clear that no matter what Vishal or his wife receive as a gift on the wedding from anyone, that is family, relatives or friends, he will not have to pay tax on these gifts. Vishal will have to pay tax only when there is any income from the gift. How? Let us understand this with an example. Suppose say a Vishal got a house as a gift from his father-in-law which he has now put on rent. This means Vishal is getting rental income from it. This will be called income from gift. Vishal have to pay tax on this rental income. Similarly, if an FD of say 5 lakh rupees is received as a gift, then the interest received from the FD will be taxable in the hands of Vishal. Not only this, if Vishal sells the gifted property, shares or mutual funds, then he will have to pay capital gains tax. Now, capital gains tax will depend on the holding period, that is, for how long the asset has been held and sold. Holding periods are different for different assets. Suppose Vishal got a house in November 2023, which he sold in the year 2027, the profit made from selling the house will be considered as capital gain. The holding period will be calculated from the date the house was actually purchased and not from the date of receipt of the gift. So, like Vishal, if you two are going to get married and you're also worried about the gifts, don't worry. No matter how expensive the gift the bride and the groom receive at the wedding, no tax will have to be paid on it. Tax will be levied only when you earn any kind of income from the gift.